All righty, time for three stock lunch. We are trading three T's: travel, telephones, and technology. Airbnb down slightly after that downgrade we just mentioned to underperform at Gordon Haskett. AT&T up after reporting better than expected subscriber growth. And choppy trading for IBM, lower ahead of earnings after the bell. Here to help us trade all three of them is Scott Nations, founder and CEO of Nations Indexes. Let's start with Airbnb. A downgrade from one company today. What do you think of the stock?
Yeah, we're going to start with the worst of the three. Airbnb is a sell. It's much more expensive.
Scott Nations, shall we hold on just a minute? Let's see if we can get it to come back. I can't really translate what he was saying there, Kelly.
Scott, if we can hear you, go ahead.
Okay, great. Airbnb is a sell, much more expensive than all the other travel names, and there's no brand loyalty among versus competitors. And the recent conversation about fees, it goes to the heart of the value proposition. So that doesn't help. That's not just a PR problem. I mentioned it's more expensive. Forward PE for Airbnb is 36.5. That's 6 times what it is for legacy air carriers and 3 times what it is for Expedia. And the question becomes, where does the growth come from to justify that valuation? And I don't see where it comes from. Airbnb is a sell.
A sell. What about AT&T?
AT&T is a reluctant buy. It's had a great day, up 6%. Tyler talked about subscriber growth, which was a surprise, also better than expected EPS. This has the potential to be an enthusiastic buy from me, because while the valuation is compelling right now, dividend yield of 5.5% and plenty of free cash flow to support that, they're getting rid of non-core products like DirecTV and the Warner Media businesses. And so if they can now focus on the wireless and the broadband businesses and grow those, then this would be not just a reluctant buy, but an enthusiastic buy.
And they've got the pitch woman, Lily, who's out there relentlessly selling AT&T wireless, and apparently rather effectively. Let's move on to IBM. Right. What's your thought there? And I'm sorry, earlier, it was Tyler unplugged, so I couldn't hear you. Everybody else could hear you.
Got it. IBM is a buy, and you mentioned that we're going to get earnings after the bell. Market expects $3.59 a share and $16.4 billion in revenue. IBM has done a wonderful job of reinventing themselves over the past decade, and now they're actually compelling also from a valuation point of view, with a forward PE of less than 15. And here's the thing: if they can really get going with their hybrid cloud business, then there is an opportunity for substantial growth here in IBM. So you get a company with a decent dividend yield of 4.7%. Decent valuation, and the opportunity for real growth if they can figure out the hybrid cloud business. They're not a leader in the space yet by any means, but they could be. And the recent pearl clutching about layoffs in the tech space just don't apply to IBM, which did not ramp up headcount during the pandemic.
People are excited about IBM again.
Yeah.
It is striking. Scott, would you buy tickets to Tyler Unplugged? Because I know I would.
Maybe I
didn't know Tyler was an acoustic
I love
champion.
That.
I'd like that, though.
I love pearl clutching. That's going to go right there in my name, along with chin stroking. All right, Scott Nations, thank you, man.
Thank you.